future homeowners, today we're settling one of real estate's greatest rivalries, FHA versus conventional loans. It's the mortgage showdown you didn't know you needed. Is one clearly better, or it's like Coke versus Pepsi? Depends on your taste, your wallet, credit score, or what you're mixing with. Anyway, let's break it down. What are FHA and conventional loans? FHA loan is backed by the Federal Housing Administration, aka Uncle Sam, and they're designed for first-time home buyers, some folks with less than stellar credit and low down payment amounts. They're more lenient, forgiving, and we've all made mistakes, so they really help you out. Conventional loans, on the other hand, they're backed by nobody but the bank who gives it to you, and they're sold off later to government entities for trading. But they're backed by nobody, but they're for buyers that have stronger credit, steady incomes, and usually have saved up more toward a down payment. It's like kind of the big leagues of mortgages. There's more independence there, and there are some wider ranges and more flexibility. It's like FHA is kind of like a training wheels, if you would, whereas conventional loans are more like the Tour de France. Down payment comparison. FHA has a 3.5% down payment if your credit score is 580 and above, and you can put more down, but it helps you out if you're kind of short on your savings. Conventional loans can go from anywhere from 0% down, depending on your credit score, all the way up to 50% or higher. The more you put down, the better your terms you're going to get, and of course, that's going to help you with your interest rates. So when it comes to who's the winner there, FHA has a low upfront cash requirement, but conventional gives you perks that you may benefit from a little later. Let's look at the credit score requirements. FHAs, you can score as low as 580 with 3.5% down. There are some programs that help you if you have a 500 to 580 credit score. So you can qualify, but you may need more than 3.5% down. It's depending on what program, what bank you contact. Conventionals, usually they want you to be above 620 with your credit score. And the better your rate, the better your credit score, the better your rate's going to be. I.e., if you have a 740, you're going to get better rates than a person with a 680. The higher your credit score, though, in either case, better your interest rate's going to be, and the better your plan's going to be. So if you have a rocky past, you would definitely want to go with the FHA, but if you have great credit, conventional may be the right way to go for you. There's something we have to discuss next called mortgage insurance. Mortgage insurance, the long and short of it is that little 20% of a home that you do not pay when you first buy it, banks require that amount is insured because that is on them. They are responsible for that 20%. The 80% of the mortgage, they may sell off to somebody else. That 20% has to be protected just in case we're not able to pay our mortgages. FHA has mortgage insurance premium no matter what you do. The whole time you have that loan, this was a change they made within the last couple of years. It used to be you could get it dropped once your house appraised to a certain value. Now it stays with you the whole entire length of the loan. Over 30 years, it will be there. The way to get out from under it is you have to refinance your loan. So most people are able to do that within 5 to 10 years because the house appreciates and the math works out to where the 20% is eaten up. But $150 or so or higher per month for 5 to 10 years is a lot of extra cash. Conventional loans can come with PMI. Sometimes they don't. Depending on your credit scores, it just depends. But if you put 20% down, no PMI. If you put 5% down and you have a certain credit score, like close to 800 or over 750, depending on the mortgage company, depending on the bank, they may be able to just knock that off and you don't have to pay it. It's depending on how competitive the market is at the time. Conventional wins when it comes to mortgage insurance to me because, it's not sticky. That FHA, that's sticking around for 30 years is just a no-go. Let's talk about loan limits and flexibilities for a minute. The FHA mortgage has lower loan limits because, like I said, it's kind of an introductory plan to get people in their first homes for the most part. Although people that have owned a home previously may still qualify for an FHA loan. You have to go and talk to the banks about who does and who does not qualify. The FHA mortgage has lower loan limits. $524,000 for most places around Metro Atlanta. $688,000 for certain places around the Metro Atlanta area. It just depends on the type of property and the county you select. It is best for first-time home buyers, but it can also be used for a 2 to 4 unit property, even if you're living in just one of the units. So that's nice. Conventional mortgages, they have very high limits, bigger house potential, more flexibilities with condos, renovations, second homes, and investment properties. So it's ideal if you got a higher income and you're buying in the price of your neighborhood, or if you're trying to get involved in investing. So which is better for you? You choose an FHA mortgage if you have a lower credit score, minimal savings, not $1,000, but minimal savings. You're a first-time home buyer and you're getting your financial feet wet. And you'd rather have a smooth approval process than worry about those insurance costs, those mortgage insurance premiums. You would choose a FHA. You choose a conventional if you got a solid credit score. You save money. You save money and you have that 5 to 20% down, and you want to ditch that PMI as soon as you can and also get a better rate. So FHA versus conventional, who wins? The truth is the winner is you. When you pick the loan that fits your budget and your long-term plans and your life. That's all I have. Thank you for listening and thank you for supporting this channel. Please like, subscribe, and share this video. And if you're still not sure which is better, that's what I'm here for. We can sit down with a mortgage officer and figure it out together. And I'd love to hear from you. Leave a comment, contact me by email, or schedule a Zoom appointment if you need my undivided attention. My contact information is in the video description. Until next time, this video is closed. Have a great day.